US regulators are still trying to work out the cause of a dramatic sell-off on Wall Street on Thursday night. Traders were left stunned after a plunge of nearly 1,000 points in the Dow Jones Industrial average. It was the biggest ever fall in history, and it happened in just 8 minutes. At just after 2:30 in the afternoon, the Dow, which had been down about 3%, suddenly tumbled another 650 points. Traders around the world were woken from their sleep to contend with a market that seemed to be in free fall. Investors were already unnerved by the Eurozone debt crisis, but regulators say the plunge, which later recovered to close down at 3%, may have been aggravated by computer trading programs. Adding to the confusion, many high-profile stocks fell almost 100% in value. Procter & Gamble, along with Accenture, were, for a short time, worth nothing. Stock exchanges have now cancelled those trades.
I think markets are increasingly concerned about the viability of the euro, and that's obviously a big deal. It's something that had not been priced into the U.S. stock market, and that's what drives this kind of volatility.
And for more on this story, we're joined in the studio by RT's financial editor, Mark Gay. Thank you very much for joining us today, Mark. So we saw massive losses on the US markets on Thursday. Now, can you tell us exactly why this happened?
Well, we heard from the analyst there that traders were already concerned about what's happening in Greece and the apparent failure, or at least slowness, of the European leaders to act to solve the Greek crisis. So they were already nervous. The market was already down 250 points. And then it seems there was either a trading glitch, what they call a misplaced finger, someone pressing the wrong button. The sell-off started, accentuated by these computer trading programs, which can sell shares in a split second. So you saw the market go down from 250 down to minus 1,000, the biggest one-day fall the market's seen. Now, that may have been technical, but I don't think that's the whole story. The nervousness of the markets was evident. People thought this was back to 2008. They thought this was another major sell-off, and the proof of that is that the volumes were almost twice the normal daily volumes. Very high volume of selling and very broad-based, not just a few key stocks like those ones that we heard that evidently in some kind of a mishap fell to zero. That was cancelled later, those trades in which Procter & Gamble fell to naught. Nonetheless, markets remain vulnerable, and I think it revealed traders' innermost fears.
And after what happened, what's the mood of the markets like today on Friday?
Well, there's a lot of volatility. There's a lot of people sitting on the sidelines, and there are beginning to be signs that there's a tightening of credit again, that financial firms are unwilling to lend to each other. That led the Bank of Japan this morning to pump $22 billion into the market to basically keep the markets functioning.
And moving now to Russia, how are the markets trading here today?
Well, you're also seeing traders sitting on their hands. You're beginning to see the first signs of some people pull money out of the markets. We had a phone earlier with one trader telling us that the exchange-traded funds are the first to see money withdrawn. The big long-term investors, they're still firmly in the Russian market, and people are just hoping that this isn't the calm before the storm.
And obviously there's still the ongoing crisis in Greece. Can you update us on that today?
Yep, we've got some news just in. The German Parliament, after 3 days of discussion, has approved 22 billion euros of German money. That's their share of the 110 billion euros, which will go to help bail out the Greek bond markets. French lawmakers have done the same. And on Sunday, the IMF's executive board is going to meet, and they're going to talk about disbursing 40 billion US dollars. So it looks like the money is finally making its way towards Greece. But as far as the way the markets are behaving, it still does look like it's a little bit late.
Thank you, Mark. Some interesting analysis there. Let's have a look at the numbers. And the tremor on Wall Street is being felt around the world. Russia stocks are falling sharply, with both bourses shedding 3% this hour. All the benchmark stocks are in the red, with Luke Oil and Rosneft leading the declines, down more than 3%. And European shares have slid to a 3-month low in early trade, with mounting concerns about a severe debt crisis in the Eurozone. Financial stocks are among the top losers, with Royal Bank of Scotland down 4.9% after it reported its first quarter results.